It's time to get on the right path. Right Path Real Estate Radio.
Oh, yeah.
With Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show, Jason Bible, Right Path Real Estate. Happy Monday, everybody. I noticed it was spring break traffic this morning. We've got some of Sarah's family over. Walked out in the driveway. My truck was blocked in, so I grabbed, we have a truck and a Honda Element. I love that little Element. So I drove that thing. Boy, it'll get up and scoot. I've forgotten how fast that little thing will go. So I got to the office in like 15 minutes. I mean, I was here. I was like, why are we here so fast? Oh, it's spring break. That's right, spring break traffic. Had a great weekend. Did a bike ride with the team on Saturday. I think we did 44, 45 miles, something like that. I can't remember. We went up to the east side of town and back. We may have a little wild dog problem here in Houston. I have never been chased by so many, like, packs of dogs. I've been chased by dogs on the bike all the time. Usually you're out in some little country road somewhere and somebody's little muffy gets out from behind the fence and kind of chases after you. And we got chased after by like 5, 6, 7, 8 dogs at a time. I mean, a pack. It was kind of crazy. I haven't had that experience before. So in any case, did a little bike riding on Saturday. Had some family come in town yesterday. Did a bike ride yesterday too. Had a lot of fun there. And then, of course, during the weekend, like a lot of you, I'm sure you guys read finance over the weekend, right? A little finance, a little accounting. Oh, that's just me. So I posted this on Facebook. This came out of Zero Hedge. It was a study done not too recently, or relatively recently, and they used 2 data sources. One is it was looking at teacher retirement in the state of Illinois. And what these guys were looking at is the difference between those teachers who retire in, let's say, less affluent districts versus those that retire in more affluent districts. And what that does relative to their retirement and pension obligations and all this other kind of stuff. Illinois is a little weird in that the state sets the pension obligation, but the district is responsible for fulfilling that obligation. So the state says, hey, district, you must do X, and the people in the district don't have much say on doing X. It's a real kind of quirky little system. But in any case, so I found this, and I thought, this is fascinating. The average recently retired teacher in Illinois, those with 30-plus years, can expect to collect between $2.4 million and $3.5 million in benefits during their retirement. 2.5 to 3.5 million. 2.5 to 3.5. Let's just round that. Let's meet in the middle there. Split the difference. It's $3 million. $3 million. Your teacher for 30 years and essentially get a $3 million pension. That is crazy. And here's why I say it's crazy. What does it take to build a $3 million retirement? $3 million is no joke. I'm going to do the math here during the break. Pull up a little retirement calculator. $3 million. I mean, that's to save that. Now, Remember, these folks are on a pension. So for the rest of us out here, we've got to save that. We have to build it somehow in a retirement vehicle. $3 million is to save it up. Even when you're making 7, 8, 10% rates of return, it's some serious saving. It really is some serious saving. In fact, I will go to one of my favorite books, and I ought to have this guy on the radio show because I bet he'd do it. Aaron Clarey's Poor Richard's Retirement. The best book I've read on retirement. I haven't read all of his books yet, but this is one of my favorites. I'm going to read this quote to you. Assume for a moment that magically somehow the entire U.S. population had an epiphany and woke up the next day with the exact same work ethic, fiscal frugality, and financial discipline of the World War II generation. Even if this did happen, relying on the current retirement system would still be mathematically impossible for the majority of people. And the reason is found in the fact that we use the stock market as the default investment vehicle to fund our retirements. And he goes on to say, the reality is the returns that we're expecting in the stock market to meet our retirement obligations, especially this far into using the stock market as a retirement vehicle, doesn't make sense. We've so far inflated the value of the stock market that it simply cannot continue. Financially, it doesn't make sense anymore. Even way back in the day, when I went to business school, and I graduated in December of 2009, and I did finance, and I will never forget doing free cash flow now, really doing discounted cash flow. That's really what we're doing. One of the courses you got to take, there's like a bazillion different ways to evaluate a company. One of the most common is to look at future cash flows and discount those to the net present value. That'll tell you how much a company is worth. It's pretty simple. It's just math. And every time you sit down and do the math, what you're paying for these companies, and that's what you're doing when you're investing in the stock market. You are paying for the value those companies bring. It's amazing to me what some of these things are trading at. Somebody asked me, hey, Jason, how do you evaluate a piece of stock or a bond or mutual fund? I'm like, I don't know. And anybody who tells you they know is a little suspect. I have no clue what these things are worth. Because the traditional modeling that you could do 15, 20, 30 years ago doesn't work anymore. I had a buddy of mine, Daniel, for my birthday, got me a really great book by Benjamin Graham. I have not read it yet. I'm working through some other books right now, but it's on the list to read. And I already know how depressing it's going to be. By the way, for those of you who don't know, Benjamin Graham was Warren Buffett's mentor. So, Warren's not a young guy. So this is the guy that taught him how to do what he does now. In fact, his first book was called Security Analysis. And if you can find a first edition, I think they go for $10,000, $15,000. I really want to buy one, but that's a lot of money to spend on a book. But in any case, I know in reading his book, he is going to go to the old school. And if you look at Warren did this the same way. When Warren bought companies, what did he really buy them at? People like to say, oh, Warren Buffett made his money on the stock market. And he really didn't. He made his money by buying assets at book value. And what is book value? Really important to understand what the definition of book value is. And I want to look it up real quick just so I get book value of an asset is the value at which the asset is carried on a balance sheet and calculated by taking the cost of an asset minus the accumulated depreciation. For all intents and purposes, just to make this even simpler for those of you who don't have an accounting background, book value is as close to liquidation value as possible. What does that mean? Meaning Warren was buying companies for the price at which they could be sold for just based off the assets in their portfolio. I'm sitting here in the studio for our radio show. We've got this desk. Truth be told, I have no clue how we got this desk. Somebody probably gave it to us. I ordered a new desk last week, by the way. So I ordered a bigger one. So I got this desk here. I got some electronic components here. I got a computer. Probably all told, we probably got 10 grand in stuff right here. Book value on this stuff, I were to guess $3,000 on all the lights and all the stuff we have here in the studio. Probably spent 10 grand. I bet we could sell it today for $3,000. Warren went in and bought companies like ours, let's say this little radio show, not for what we have in it, which is 10 grand. He bought it for the street price, if you will, if he had to liquidate it today, which is $3,000. It is almost impossible to lose on a deal like that, especially if you do your homework. He's really going out there and buying assets at fire sale prices. That's really what he did. And if you read some of Ben Graham's work, that's exactly what he tells you to do. And I'll tell you what, that is exactly the strategy we use in our single-family house buying business.
1 minute.
We're buying houses for less than they can be built brand new. We're buying houses at $20, $30, $40, $50 a foot, square foot. It costs $125 a foot to build new. It's really hard to screw that formula up. We get back from the break, we're going to talk more about retirement. I might even talk more about Aaron Clarey's book here. It's Jason Bible, Right Path Real Estate.
Mike's off.
What's going on, Brent? Daniel?
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com. And don't forget to tell us you heard about us at Right Path Real Estate.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in
we got
investment
45
real estate.
seconds.
All
We
right.
understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns
Oh,
getting
man, I
rewarded
knew
for
that was gonna
retirement
happen.
plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906.
Wonder
This
which one it
investment is offered
was.
to accredited investors.
This is
All
Business
right.
1110.
All right. Hold on. All right, here we go. Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. You know the radio show is getting serious when I break out the HP 12C. You know, it's funny. I was meeting with one of my lenders last week, and we had a lot of fun. We've known each other for years. So I met him at his office, and it's so funny. It's the first time I've actually been to his office. And his office is set up just like mine. His desk is in the corner, and he's got a conference room in the middle of his office. I said, dude, I love this. Because then you can always have meetings, and you don't have to go anywhere. You just sit there and keep working, and then you just bring in the next crew, right? Bring in the next meeting, bring in the next. It's great. Anyway, so I saw him in the middle of our meeting. We started talking about numbers and that sort of thing, and he pulls out his HP 12C, and it is just all beat up. And I was going to ask him if it was his, how long he's had it. That's kind of the thing. I keep meaning to go to eBay and find an old one, but Santa brought me this one. So, the radio show is getting real when I break out the HP 12C. So I've got, on the left side here, I've got my book open. On my laptop here, and I've actually gone back to my old MacBook Air, the 11-inch, so it fits on the desk a little bit easier. I've got that in front of me, and to my right, I got my HP 12C, and above that, I got my coffee. So this radio show is about to get real quick. Let's talk about what it takes to have $3 million in retirement. Sorry, I just had a Dr. Evil moment there. $1 million. Instead, it's $3 million. Median household income in Houston, Texas is $75,000. Median household income. Let's just use the median numbers for now, and then we'll tinker with this thing here in a little bit. If you started saving for retirement at age 35 and your current retirement savings had $100,000 in it, so you got about, you've been working for you've been working for about 10, 12 years now. You got $100,000. Actually, you know what? Let's take that $100,000. Let's make it 50, because I should have looked up what the average retirement account is at age 35. I bet it's close to zero. I mean, I know a lot of people who still have student loan debt in their 50s, which is insane. So you're 35 years old, household income $75,000. You save 15% of your income for retirement. Now, I know what you're telling me. Jason, that is a crazy amount of number. Or that's a crazy high number. And I'll tell you, yes, it is. I've got Dave Ramsey's book here. Actually, it's one of my favorite of all of his books, The Complete Guide to Money. I think it's an excellent book. It's a no frills, no fluff. Like, this is how you should build your life financially. I think I told you guys a couple of weeks ago, I'm going through and I'm rereading all the financial gurus, if you will, out there, and his was one of the books I read. So, The Complete Guide to Money. I think it's way better than Total Money Makeover and all the other ones. Anyways, so in Dave's book, Dave says, hey, look, you should save 15% of your gross towards retirement. And, you know, at $75,000, how much is that? That's $11,250 a year. It's $1,000 a month. I want to let that sink in for a minute. Household income, $75,000 a year. That household should be saving $1,000 a month for retirement. That's a lot. Let me go through the rest of these numbers for you. And again, we're trying to get to 3 million. In Illinois right now, and I need to pull it up for Texas. I can pull up the TRS system for Texas. In Illinois, if you're a teacher that stays for at least 30 years, you're guaranteed a retirement somewhere between $2.5 and $3.5 million. Let's call it $3 million. Let's take a look at a household that earns $75,000 a year, that saves 15% of their income, that assumes a 7% rate of return on their retirement. Meaning they put $1,000 a month in, and every year they make 7% on that $1,000 a month. By the time they were 67, so in about 32 years, they will have only saved $1.8 million. Let me give you the numbers again, because I really want you guys to focus on this, because one of the things I find fascinating is when someone says, oh yeah, I'm just going to save X, Y, and Z. Oh, I'm 45 and I really haven't figured out the retirement thing yet. But you know, if I put like, $1,500 a month away, and I'm like, you're not going to make it, man. You're just not going to make it. There's not enough time. And there's not enough return. That's the other problem. You got a household income making $75,000 a year. If you're saving 15%, which means you're saving about $1,000 a month for 35 years, which is about 30 odd years, earning 7% on your money, you will have accumulated $1.8 million. $1.8 million. And you'll make that'll give you about 90% of your earned income in retirement. I don't know about you guys, but I'm not a big fan of making 90% of what I made before. Let's make that 100%. Let me change that in this calculator here. Let's recalculate that. Oh, it's not working out for me real well. You're going to need 1.8 million. So what does 3 million look like? When you start calculating these benefits that some public employees are getting, you start to realize real quick that it's not sustainable. I mean, if you want, at $75,000, if you want $3 million in retirement, you're going to have to save I bet it's about 27% of your income. Yeah, 27% gets you $2.957 million, assuming you're making 7% on your money. The average household in Houston, Texas would have to save $2.9 million. I'm sorry, would have to save 27% of their income to make $2.9 million for retirement. By the way, if y'all remember from last week, one of the things I shared is that you are going to have a Medicare liability, out-of-pocket expenses alone, somewhere between $250,000 and $500,000 in retirement. That's why I keep telling everybody, if you want to be broke, go ahead and retire. Most Americans, I'm trying to remember where I heard this stat from. It was something incredible, like 88% of Americans had less than like $100,000 in retirement. I'll see if I can find it. But just amazing statistics. Here's the reality. You cannot save your way to retirement. It is impossible. And I'm not the only one saying it. There's guys like Aaron Clary here in his book that's saying it. I mean, I'll give you another great quote. The problem with stocks and mutual funds and all that other stuff is because the price has been driven up so much, because it's been the investment vehicle of choice for the last 30 years, it's not only made stocks roughly twice as expensive for young investors, but has also introduced an impossible and incredibly dangerous variable into today's retirement planning: perpetual capital gains.
2 minutes.
Here's the problem. 2 generations ago, when you retired, you sold the farm, or you took whatever savings you had and you parked it into a CD or a bond or something that produces interest, monthly cash flow. Today, the way you retire is by selling the asset. It's the old golden goose story, right? 30, 40 years ago, you built up this nest egg that produced cash. Now you've got to go in and Dave actually talks about it in his book. You got to crack open that nest egg. Well, that's a problem. I don't want to break the egg. I want more eggs. I want a chicken that just keeps laying eggs.
1 minute.
I want the golden goose. I want something that produces time and time again. What happens if you plant a tree in your backyard and it produces fruit? You like the fruit and there's a lot of shade from the tree. Now in your retirement years, you're going to chop that tree down so you don't get any fruit. And you can't sit under the tree for shade anymore, so you sit out in the sun and get burned. Why would you do that? Here's what I know. We can't save for retirement. And even if we could, we end up spending the money and praying we die before we run out of money. That's what all these calculators have in them, by the way. How long do you expect to live after you retire? Why don't we find a better asset that we can buy and it produces cash over the long term? We're going to talk more about real estate and retirement. It's Jason Bible, Right Path Real Estate.
Mike's off.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRA.
Oh, that's a good stat, Richard.
The $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly
1
general
minute.
contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done. Train and maintain quality crews so
I wonder
it
if
gets
Fast
done
Track's
right,
cracked
and complete
1,000
the work
yet.
in a proper
We
order
have like
so
a
it gets
party
done
or
fast.
something.
No more managing
That's a lot
it
of
yourself,
rehabs.
No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992.
Oh, Richard, that's
Or
funny.
reach us on the
And
web
you
at
know the GAO
fasttrackremodeling.com.
estimates are always off by about 50%.
All right, Mr. Bible, you ready?
I'm ready.
All right, here we go. Hot mics.
Welcome back, Jason Bible, Right Path Real Estate. Buddy of mine here, Richard's watching us on Facebook, and he dropped in a little stat from the GAO. 29% of households age 55 plus have neither retirement savings nor a pension. 40 million households have no retirement savings at all. Here's a little warning for those of you on public pensions. Now federal pensions are a whole different animal. But I'm talking teachers, firefighters, EMTs, like city workers, state workers, all that. Your pension is not as secure as you think it is. There's a case in front of the Supreme Court right now discussing this issue. And I'll tell you, if you think you're locked in, you are absolutely wrong. Because when it really comes down to it, everybody's broke. Everybody's broke. Meaning, you can't go back. You can't go back to your city, your state, and keep borrowing more money in the hopes to pay retirees. That strategy is not going to work. I mean, you want to talk about the big lie. I think there's a lot of these financial people that have lied over the years. They've lied with math because most people are bad at math and nobody can call them on it. But if you want one that'll just, hit them right between the eyes, look at the return assumptions on pensions. In other words, when a pension is created, private, public, doesn't matter. They make assumptions on how much money the money is going to make, the rate of return. Sometimes you'll see it out there as ROI or IRR. It doesn't really matter what metric they use. Just look at some of those assumptions. Some of those folks that run those pension funds are assuming 8, 9, 10, 12% rates of return. That's incredible. That's assuming a couple of things. One is the market perpetually increases in value. And that's what Aaron Clarey talks about in his book. And that's what I love about this portion of his book. We moved stock investing from looking at the fundamentals of a asset. In other words, that piece of equity, that's what a stock is, a piece of equity in a company. We used to look at that and say, well, how healthy is a company? How much cash reserves do they have? How much debt do they have? How much cash are they producing from operations? In other words, profit. How big is their market? What's their potential for increasing market share? What's their market penetration? All these really cool things about running a company. And now we've turned that into, let's invest with our 401k and IRAs and pray that the stock prices keep going up. Well, wait a second. What happened to the fundamentals of the business? That's what I think is so hilarious. When we run into somebody and somebody tells me, and I hear it all the time, Jason, isn't investing in real estate risky? And I always say, this is something Bob had told me. This guy I worked for years. Bob told me this one thing. As compared to what? Because that's important. A lot of people will just spout stuff off, and then I'll say, guess what? As compared to what? What do you mean real estate investing is risky? As compared to what? Oh, well, investing in stock market mutual funds is much less risky. Really? Are you sure about that? How do you measure risk in your IRA? And then I'll hear silence. But then they'll say, but if you have tenants in a property, they could tear the property up. Or if there's a fire or there's a flood, and I'm like, well, you have insurance for all that, so who cares? You have insurance on your 401k? Oh. You need to go talk to some people who are invested in Enron. I mean, you want to hear some heartbreaking stories. Where's that insurance? How do you manage that risk? The vast majority of risk in real estate, I can manage. If I can't manage it with insurance, I just pay less for that piece of property. It's that simple. How do you manage risk in the stock market? Unless you're able to invest in derivatives, and most people don't have the financial or mathematical acumen to do that, your only risk management technique is diversification and dollar cost averaging. Both are horrible. Warren Buffett says it. I love it. He says it every couple of years, and the financial media go nuts. And that is diversification are for people who don't know what they're doing. And he's right. The vast majority of Americans who, quote, are winning at life and just randomly investing in stuff, they're going to find out pretty soon here that that is not a prudent strategy for building wealth. With all of the discussion we've had today and how much the market has risen over the years, why do you think 8 out of 10 millionaires come from real estate? I'll give you one hint. Because the other stuff doesn't work. All that other stuff doesn't work. It's real simple. I figured out years ago, in order to be successful at something, just mimic the things that other successful people have done. We've had multimillionaires and billionaires for 200 years in this country. I have to go back and look and see when our first millionaire was minted. But for hundreds of years. I watched a documentary on Trump. And in fact, they went back to Trump's grandfather, who was a real estate guy. He ran like a hotel. I mean, just like they're doing now. Ran hotels. It was even rumored he ran a bar with a brothel in it. I mean, it was all that kind of stuff. And you think over the generations that those lessons weren't passed down from senior to junior to, I mean, you bet they were. You don't see Trump running out and putting together a big fund and investing in cryptocurrency. My two favorite investors are Carl Icahn and Sam Zell. You don't see either one of those guys running out investing in Bitcoin or going out and putting all their money into a mutual fund. I tell you, Sam Zell is a real estate monster. It's real easy. You know how easy it is for me to figure out what a piece of single-family real estate's worth? I go and look at a house. And that house is all messed up. Because that's the only real estate I buy is distressed. When people ask me, Jason, what happens if the real estate market crashes? I don't know. It crashes. I don't care. Because I buy the next distressed asset. It doesn't matter to me. In fact, when the real estate market crashes, I just buy more of it. I don't care. What the, quote, market does has no bearing on how successful I am. But you know what? If your 401k is invested in that market, I bet you do care every day what happens in that market. I don't. The people that are in our group don't care either. Oh, market crashes? Great. So I'm buying 10 more houses this year, 15 more houses? Oh, a hurricane blew into town? We have people in our group, hurricane blew into town, messed their portfolio up. Half of them are flooded. Do you think they started crying in their cereal and said, I don't want to be a real estate investor anymore? No, they're going out and buying more. Oh man, this is a bummer. Half my portfolio is underwater. Guess what? I'm going to go buy the rest of this neighborhood because I know all these people don't want to live here now. We don't care. I don't care about those ticker symbols for more than just casual what's going on in the market. From a net worth standpoint, I could care less. Who cares? I can't understand the level of stress that some of y'all experience as you get close to retirement. Because I bet you're watching the S&P every day. You're watching the Dow every day. Oh my gosh, what's going on with North Korea? Who's the president today? What are interest rates? I mean, I just can't imagine that. You're so stressed out about a bunch of stuff you have zero control over. Is that the way you want to live? Look, folks, there's two ways you can do this. The hard way or the really, really, really hard way.
1 minute.
Let me explain what the really, really, really hard way is. You save a bunch of money. You put it in these markets. The markets do whatever the market's going to do. At or near retirement, your 401k is now a 201k. You spent 35 years saving, and right at the time you have to retire, which may be your choice or not, and those of you who are in 30s and 40s right now, ask some folks who are a little bit older than you about being let go at their job because they make too much money, and now they're forced into retirement 10 years early. That happens all the time. And oh, by the way, it doesn't happen when the market's at a peak and you're making a bunch of money. No, it happens when your 401k gets cut in half. That's the really, 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 really hard way. Now I'm going to explain another way when we get back from the break. It's Jason Bible, Right Path Real Estate.
Mike's off.
Hello, real estate investors. Do you you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market.
Man.
Give Next Gen a call at 713-346-9911 or check us out online.
I had a spark packet blow up all over my calculator.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre
30
results?
seconds.
There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. We got two options. We can do the really, really, really hard way. You save up $1.5 million, $2 million. You're in your 50s. You think, all right, I'm kind of on track here. I'm on track to, another 10 or so years. Bring this retirement thing in for a soft landing here. My mid-60s. If I want to work, I can. If not, kids are going to be out of the house. College is going to be paid for. I'll be looking good. Then all of a sudden, what happens? Market changes, and they no longer need you because you're the highest paid guy in your department or gal, and now you don't have a job. All the dreams of sweet retirement, putting more money away after the kid's out of college are gone. Your $1.5 million, $2 million is cut in half because the market's changed. And now you end up in one of our seminars. I hear this 1 million times a day. It would not shock you. Jason, I got $1.5 million. I'm 56. Got $1.5 million sitting in 401k. Trying to find the next job that pays as well as my last one did. But as you know, I'm one of the highest paid guys in my industry, and finding that same job is tough. I got a couple $100,000 sitting in a checking account. I'd like to invest in real estate. What do I do next? And I'm like, we need to get you buying some houses ASAP. Let's get you some distressed houses. Get them fixed up, put a tenant in there, get these things paid off as quickly as possible.
2 minutes.
That's the really, 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 really hard way. Or the hard way is to go ahead and start investing in real estate now, in 30s and 40s. You don't have to buy 100 houses in a year like we do. We can show you how to buy 5 or 6, and that's plenty, especially when you're young. Or if you want to buy 10 or 20, we can show you how to do that, or 50 in a year. One of our students holds the land speed record right now at 11 houses in 14 days. In fact, we were joking with him. He's increased his net worth $1 million the first 8 weeks of 2018. If you want to work that hard, you can do that. Or you can buy 6 or 7 of these things a year.
1 minute.
Retirement shouldn't be this hard. And I'll tell you, the current strategy of invest everything in the stock market, invest everything in the capital markets, does not work. Statistically, does not work. You can't save your way to retirement. You're going to need to buy some assets. Best way to do that, learn about us. Come on out Thursday night. We're going to talk about how to flip a mold house. We're going to talk about some of the deals that we've done. We're going to do an introduction to real estate. Our vendors and radio show sponsors will be there so you can help build your team. And, of course, the weekend retreat is this weekend. If y'all want to come out to the weekend retreat, send an email to support at Right Path Real Estate, and we'll get you signed up that way. I want to thank everybody for listening. Tom will be here tomorrow morning, Tuesday, for Build Your Team Tuesday, 9 a.m. Be here, bright-eyed, bushy tail. It's Jason Bible, Right Path Real Estate.
All right, have a good one.
All right, thanks.
You've been listening to Right Path Real Estate Radio.